President Biden changes course and pardons his son Hunter just weeks before leaving office, claiming the case against him was politically triggered. Well, a new threat from France's far right to topple the government hours after the finance minister tells Bloomberg his administration will not be blackmailed. Plus, the Stellantis slumps after the chief executive, Carlos Tavares, quits after a dispute with the board over the struggling car maker's future. Now, good morning, everyone. There's quite a lot going on, but let's start it with the European markets map. As you heard it in the opening trade, we're seeing a bit of pressure on, of course, the CAC 40 over in France, but that's mainly to do with the LVMH that's actually gone ex-dividend. Now, a couple of the other things we're watching out for is, of course, what happens in France, French far right. Those threats to topple the Barnier government is definitely deepening, and that's showing up in some of the spreads. A couple of other things we're watching out for: dollar gaining, again, the dollar pushing higher amid weakness in the euro and the yen. Traders also, again, digesting some of the political tensions in France and a rebound in treasury yields. I'm also looking at Stellantis, those share down more than 5%. And then a couple of the other things we're watching out for: treasuries dipping, traders actually looking ahead to U.S. data that may help shape Fed policy and assess hawkish comments from the Bank of Japan. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the U.S. President Joe Biden has signed a sweeping pardon for his son Hunter, reversing his previous stance that he would not use his executive power to do so. Now, for more, let's bring in Bloomberg's Brussels bureau chief, Kevin Whitelaw. Kevin, why did he reverse his position on the pardon?
Well, I think he basically was explaining it that he is worried about the political ramifications of a Trump administration and essentially the threats that he's heard from Trump and the people around him about continuing to go after Hunter Biden on various things. So he basically said he got a little too worried that there was going to be a politically motivated set of continued prosecution of his son, and that he couldn't put him through that after all that he'd been through. But obviously, this is explosive in other ways, and a lot of Democrats were very, very upset when they heard about it because they were worried about losing sort of the moral high ground when it comes to the handling and the conduct of in the White House and the use of the pardon power.
So, what does this mean for the Democrats going forward and their approach to Trump?
Yeah, it's going to complicate it. I mean, I think that, we've already seen Trump had expanded the idea of the use of the presidential pardon in his first term, pardoning several aides and associates. And so it's not like this is, entirely new ground, but it is a family member in this case. And it just makes it that much harder for Democrats to try to sort of hold the line about how, what's appropriate, what's not appropriate. And this is a time where they've already been worried about the possibility the next administration is really going to take what had been a much more nonpartisan Justice Department and legal process and potentially use it for more partisan purposes. And so as they try to guard against that, this is sort of a bit of a chink in the armor.
Thank you so much, Kevin. Bloomberg's Brussels bureau chief, Kevin Whitelaw. Now, the president of France's far-right National Rally has vowed to sink the French government unless there is a miracle. That latest threat comes after the country's finance minister told our Caroline Conan that he refuses to accept Marine Le Pen's demands for budget changes, saying the government will not be blackmailed. Well, Antoine Armand spoke to Bloomberg exclusively.
The French government doesn't take ultimatums. It's looking at the French parliamentary debate. It's respecting each and every parliamentary debate that leads to an evolution. We will take into account what is changing, but we won't be blackmailed. We are committed to reduce the deficit.
Well, let's get more from Bloomberg's Caroline Conan in Paris, who did the interview. So, Caroline, what else did Armand tell you about what other concessions the government is actually ready to make?
Francine, clearly, Armand was not talking to me to make more concessions to Marine Le Pen. He just wanted to reassure investors. He thinks that a lot of concessions have already been made, including on prices of electricity, on contributions of small companies. So clearly, this was a way for him to say that we need to pass his budget to make France stronger and especially to keep the deficit under control next year, despite all the new concessions, which are estimated to cost about 10 billion euros. Antoine Armand told me that he maintains his deficit target at 5% for next year. We'll see how that pans out. Clearly, time is running out for this government. Marine Le Pen's national rally has actually given a deadline of today around 2 p.m. UK time, 3 p.m. French time, to say officially whether she will support or not a vote of no confidence that could happen as soon as it's Wednesday and make the government of Michel Barnier collapse.
So what can we expect next, Caroline?
So today we'll see this vote of no confidence, whether it actually happens. And then we could also have another one as soon as the end of this week on the finances of 2024. So kind of validating the budget of last year. And in fact, this 2024 budget is interesting because if the government collapses and there is no time for a new budget, this 2024 budget is going to be rolled over into next year, which in itself will not provoke a shutdown in France like we see, for example, in the US, but will definitely have a huge impact on deficit and clearly will not please Brussels. So we'll see how that pans out. And there's another deadline coming the week before Christmas when the National Assembly has to vote on the overall budget. So even if Michel Barnier's government does survive this week, there is possibly another vote of no confidence the week before Christmas.
Caroline, thank you so much for all of the great work there on the ground in Paris. Caroline Conan. Now let's get market reactions from Freya Beamish, Chief Economist at TS Lombard, and Bloomberg MLife strategist Noor Alali. Noor, thank you for joining us. Freya, thank you as well for joining us. Freya, how much should we worry about what's going on in France and how that could affect and impact the rest of Europe?
Yeah, it's obviously incredibly messy. So far, the EC has accepted the Barnier proposal for a 1.9% reduction in the deficit. That then has to get passed by the Assemblée. It's not going to get passed by the Assemblée, in which case the government is relying on decree, which is possible under the Constitution. 49.3 of the Constitution says they can do that, but then it's back in the ball is back in the court of the Assemblée. In the sense of these no confidence votes. But to get the no confidence motion passed, in which case the deficit would sort of stagger on at this 6.6% of GDP. To get that no confidence motion passed, they have to have an absolute majority, as I understand it, which is 289, and that then requires the left and the right. There's some kind of cohesion there. So we have the right now very clearly saying that they are willing to bring down the government, but there are still the 66 members within the bloc, which is the left, which is the mainstream socialist party, and they could still abstain. So there's still kind of, as I understand it, there's still something to play for in that question of whether we'll see the reversion of the oat spread.
But Noor, I guess with all of that, what's the investment case for a market participant?
Well, look, it's really tough, right? Because we're in a festive time, Francine. December is typically a really good month for the euro, for European stocks. We're expecting bonds to rally with the ECB expected to cut rates. And now you've got all these fiscal concerns that are weighing so heavily on the euro area's second largest economy. So from an investment standpoint, perhaps those yields, those spreads going wider make sense. But as I note today, the spread didn't widen to the levels that we saw last week, right? It has widened by the most since June at the Open, which, we keep spreading that size and scope more and more. So there's definitely a lot of concern. And that 2 p.m. deadline today for that no confidence vote that Caroline was talking about is something that's going to get a lot of traders stuck to their screens waiting to see if we're going to get more instability, more uncertainty, or some clarity at least.
Freya, where does the good news come from in Europe? We have elections in Germany. Again, a lot to go for, and you need this Franco-German axis maybe to counter the Trump tariffs.
Yeah, I'm actually quite positive about the fact that the election in Germany has been called. I think the constitutional debt brake is finally coming under the pressure that it deserves to come under. We've been a house that for many years now has suggested that there should be a greater understanding of the downsides of the fiscal austerity that is imposed on Germany and therefore the European bloc by the constitutional debt brake. And the fact that we're having this election now on the heels of strong gains for the AfD in the most recent elections, I think this is a good thing to sort of force policymakers to sort of realize what needs to happen. With the threat of Trump 2.0, with the threat of the withdrawal of funding for Ukraine, that increase in defense spending as a percentage of GDP that has already happened will continue up towards the 2% and probably beyond the 2%. For Germany to really kind of get on board with that, we do need a higher degree of fiscal federalism, which is due, and I think would be positive for the rebalancing of the bloc. And that election coming at this stage really kind of pushes policymakers to say what their case is, to state their case, and hopefully that comes down on the side of allowing these kind of ways of coming around the constitutional debt brake and moving towards greater fiscal federalism.
Nor what if, again, the German election doesn't really give us a clear outcome? If you look at some of the risks out there, is there anyone that can take the place of France and Germany in a new axis that the markets would welcome?
Well, look, at some point last week, Francine, we had the across the curve here, the Greek debt issuances is actually within the French. So you can actually see that yields have been rising in France at levels that now we're comparing to Spain, we're comparing it to Greece, countries that are on the periphery that are notoriously known to having fiscal issues that generally keep markets uncomfortable. Now, we've been talking long about how bond vigilantes this year have been here. We've seen it back in 2022 in the UK. We've seen some semblances of it across treasuries, the UK gilt market again, and now in France. And so the concern here is that bond vigilantes are really not going to catch a break into the year end because there's just one too many risk events that are out there. You also have that concern of tariffs, how that's going to play out in Europe. The euro area, its major trading partners beyond the region are in fact both China and the US. So really, whichever way you look at it, it's not looking pretty bright.
Freya, how would Europe actually deal with the Trump tariffs? Again, we don't know whether they're 10, 20%. We know that Europe says they're much more organized than the first time round. How much does that hit the economy?
So again, thinking about kind of core versus so-called periphery, the periphery is actually doing really well. And going back to the previous comments we were talking about, the watershed moment there was actually next generation EU. That's when we started to see those kind of synergies picking up. With regards to the reaction of Europe to the tariffs, I think it's going to happen very much on the business level. And there's pros and cons to that. I think that multinational corporations, there's actually quite a lot that multinational corporations have to offer Trump, and I think that's the level that he's going to work on. So we'll see businesses doing deals with Trump to make factories in the US. Some have a lot of space to do that because they don't employ that many. In some countries, they don't employ that many workers in the US. There's some countries that really stand out as kind of likely to receive more kind of targeting of tariffs if that's the route that is taken, which is what we think. Germany is definitely one of those. Ireland is really high up there with a massive surplus with the US. So I think it's gonna end up being sort of more case by case, partly because of the US legal system, but also because I think businesses will have something to offer Trump, and I think he's going to want to go down that route of getting wins rather than imposing inflation on the US economy.
Freya, thanks so much. Freya Beamish from TS Lombard stays with us, and thank you as well, Noura Al-Ali from Bloomberg MLive Strategy. Coming up, we'll talk a lot more about Trump. We'll talk about inflation and immigration in the U.S. Stay with us for more market analysis. This is Bloomberg. Well, Well, still with us, Freya Beamish, Chief Economist at TS Lombard. Freya, there's so much to talk about, given that we don't know much about the Trump policies in concrete, but he talks a lot, about them a lot, saying that tariffs is also his favorite word. What do we know so far, and who do they hit first? China, Europe, or emerging markets?
Yeah, I think Europe has a lot more to offer. They are allies, so they have the option of sort of sweetening things by offering factories and to build factories in the US to create jobs in the US in the same way that these types of trade talks decades ago happened with Japan. That was the route out. China doesn't have that option, and China also has the underlying economic imbalance of being deleveraging when the rest of the world has already deleveraged. So they have this natural tendency towards needing to rely on external demand. So I think there's going to continue to be sort of flashpoints there. It's going to come down to, how many US airplanes is China willing to buy? And also this kind of deeper shift of moving towards domestic demand, which seems to be happening at the margin amongst Chinese policymakers over the past couple of months. They seem to be realizing that deflating their way out of a debt crisis is perhaps not the best thing for their own internal politics either. So there are some kind of good signs there as well.
Freya, when tariffs hit, and I don't know whether it's if or when, the market seems to be pretty complacent that actually this is a negotiating tool. I hear from economists and market participants that they're much more worried about it. But when they hit, is it automatically inflationary also for domestic U.S.?
Yeah, I think markets have been focusing much more on the sort of demand side policies and not so much on the risks of these negative supply shocks, which are really serious risks. I think I'm still in the camp of suggesting that he's going to want to go down the route more of using it as a negotiating tool. That certainly seems to be how Besant views tariffs, and that could be a good thing for global demand for the U.S. economy in terms of just that focus on demand side rather than injecting these negative supply shocks. But negative supply shocks can be incredibly serious for markets. In terms of whether they create inflation, there's certainly a one-off inflation shock if we look at 2018. But even if you look at the level of prices, not even just inflation, if you look at the prices of washing machines in 2018, they went right up at 100% 3-month annualized rate, which is eye-watering, but the level came all the way back down again. So in the first instance, these are sort of one-off inflation shocks. The way in which it translates into higher inflation on a systemic basis is if it actually does create deglobalization, in which case the US economy looks much more to US labor costs and the progression of US labor costs when it's generating its own CPI inflation. And we know that there's a structural tightening of the US labor market, particularly as immigration seems likely to decline.
Freya, thank you so much for all of those insights. Freya Beamish there, Chief Economist at TS Lombard. Now coming up, Stellantis shares under pressure after the chief executive steps down. More on the auto sector next, and this is Bloomberg. Well, the Stellantis chief executive, Carlos Tavares, has resigned after a dispute with the board over how to reverse weakening sales and a stock slump. Bloomberg's Oliver Crook joins us from Berlin. So, Ollie, let's start with Stellantis. It seems that the European auto crisis has claimed its first chief executive.
Yeah, that's right, Francine. I mean, listen, there's a sort of sense at Stellantis that basically it never recovered from that profit warning that they issued back in September, and it's been sort of staggering forward ever since. And even at the time, there had been speculation that they might replace the CEO, Carlos Tavares, but he moved very fast in that moment to sort of quash all of those discussions. He got rid of the CFO. He reorganized the entire structure of the business, a new COO, a new COO for North America, replacing the heads of Maserati and Alfa Romeo, and really has been sort of staggering forward through time here, but basically it was not enough. What I think is interesting is that this all came to a head on Saturday, and it went fairly quickly from unanimous support of the board to so-called strategic differences. And I think that for many in the analyst community, and you can see it there represented on your screen right there, Stellantis down more than 8%. Why is it better to have basically an interim CEO or no CEO for this period of time rather than just holding on to Carlos Tavares and just sort of accelerating the search for a new CEO, which was already sort of ongoing beginning back in September when we had already known that Tavares was going to leave basically at the end of 2026. That timeline has just sort of really ramped up very quickly. And we should say we can sort of understand some part of this because, of course, Stellantis, despite having outperformed a lot of the other automakers through the last few years, this year is the worst performer in Europe, down some 45%. That's being added to, of course, this morning by the strong sell-off.
But, Ollie, how much of this is a Stellantis problem versus an industry problem?
Yeah, so Francine, this is really interesting. When you contrast Stellantis versus, say, some of the other auto manufacturers like Volkswagen, who, by the way, is also not having its own issues, beginning strikes today because they could not get a resolution with management over the sort of job cuts there. What Stellantis didn't have is that huge exposure to China, so it was sort of insulated to some of the issues that some of the German automakers were having. What they did have is increasing problems over in the United States, and that is really at the heart of the problem of Stellantis right now. There's been a huge amount of inventory sitting on lots. They went from basically almost about 12% of the U.S. market share down to about 8% over the last sort of year period of time. And that has really been concerning a lot of people. And there was some real question about whether Tavares could really turn this around. The issue with this, and the reason that the sort of market perhaps is sort of unsatisfied with the swift departure of Tavares, he was also the king of cost cuts within the auto sector. The critics would say that he cut a little bit too far and that sort of represented itself in some quality control issues over at the car maker.
Ollie, thanks so much. Oliver Crook there in Berlin. Coming up, we speak to the chief executive of Ukraine's largest steel producer, Metinvest. We talk business performance and the impact of the Russian invasion. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. President Biden changes course and pardons his son Hunter just weeks before leaving office. A new threat from France's far right to topple the government hours after the finance minister tells us his administration will not be blackmailed. Plus, Stellantis slumps after the chief executive, Carlos Tavares, leaves the company after a dispute with the board over the struggling car maker's future. Now, the German Chancellor has arrived in Kyiv to meet the Ukrainian President Volodymyr Zelensky. Olaf Scholz is expected to announce more military equipment to the country worth 650 million euros. Now, last month, the German Chancellor faced criticism from holding a direct phone call with the Russian President. To talk about all of this, let's bring in Mark Champion from Bloomberg Opinion. Mark, thank you for joining us. So, Olaf Scholz has arrived in Kyiv, and actually we're expecting him to announce this additional military equipment worth 650 million euros. What does Ukraine need right now?
Well, I mean, Ukraine's been very clear about what it wants. It needs a lot of aid, essentially the real issue here, and Scholz kind of expresses this very well, is that we're all awaiting a new Trump administration, especially in Kyiv. And it's very unclear whether the U.S. policy towards Ukraine and supporting Ukraine will be continued. So, of course, then the question for the Ukrainians is, how do we survive even through any negotiations that Trump might, bring in? And then, of course, that the only other people there really are the Europeans. The Germans, obviously, are actually a large part of that. They've been major suppliers of weapons. But it also, at the same time, shows the sort of weaknesses in Europe and, real questions around whether it's capable of, coming through.
What do we know about Russia's foreign policy as we get ready for Donald Trump in the White House?
Well, I think that they, like everybody else, are trying to figure out exactly, what the new administration will have as red lines for itself, what policy it will follow. It's clear, the Russians are interested in expression from Trump that he wants a deal quickly. The Russians would like that, but they have very clear, and they've been very clear about what they want to get from a deal, and that is essentially what they've always wanted in Ukraine: demilitarized, denazified, as they call it. Etc. Territorial issues are important, but perhaps lesser.
What can you tell us about Syria?
So in Syria, it's really interesting in the sense that you've got the result of Russia's extreme engagement in Ukraine at the same time as Israel's attacking, weakening Hezbollah and Iran. It's created this opportunity for the opposition forces that have been protected and nurtured by Turkey to move forward. And I think they've surprised even themselves by the ease with which, initially at least, President Assad's forces just melted away.
So we have this headline, Kremlin saying that Russia is continuing to support the, Mr. Assad of Syria, but there's also reports about him flying to Moscow.
He flew to Moscow, and the Russians have said that they will support him. They are. There are airstrikes that they're conducting. Yep. But the capacity of Russia to really get involved. Let's say, for example, that the Syrian forces again, as they did in 2015, begin to really collapse. What will Russia be able to do? What will the Iranians be able to do on the ground? Then they were able to bring in different militias, including Hezbollah. Hezbollah is now very much weakened.
Mark, thanks so much. Mark Champion there from Bloomberg Opinion on the very latest, of course, in the region and the Middle East. Now, Russia continues to target Ukraine's energy and infrastructure with missile and drone attacks. Let's discuss all of this with Yuriy Ryzhenkov. He is chief executive of Metinvest. It's Ukraine's largest steel producer and parent company of the Azovstal plant, which became a symbol of Ukrainian resistance during the siege in 2022. Thank you so much for joining us again. I think last time we spoke, Mr. Ryzhenkov, you were telling me that actually you needed a bit more comfort, that the war was, if not coming down, certainly slowing down. The war risks decreasing considerably for you to build Green Deal projects. Can you elaborate on that a little bit more? What do you see now and what are you hoping to see in the next couple of months?
Well, unfortunately, the situation remains pretty challenging in Ukraine, and we haven't seen any slowdown in the war. In fact, we've seen some speeding up in the last half a year. So the investment climate is still not forthcoming for the investments to be done in Ukraine. However, as a player on the international arena, especially in the European markets, Metinvest decided to start a project on a green steel plant in Italy, which will be the pilot project for us and for our partner Danieli, to then reconstruct Ukrainian steel industry once the war is over, once we have a definitive end of the war.
Yeah, when you say definitive, I mean, does it mean that a peace agreement will have to be signed for you to make large investments in Ukraine, or is the freezing of the war enough?
Freezing of the war is not going to be enough. We already had freezing of the war when we had Minsk agreements. And we all saw what happened after that to the Minsk agreements. So now we need some solid security guarantees for Ukraine. And only that will be able to bring major investments into the country, including the green steel investments. Before that, I doubt any serious investments will be coming into the country, unfortunately.
So how much could you put in Ukraine, and how much have you put in Italy so far?
Well, the project in Italy is a €2.5 billion project, which will be obviously financed by the equity injection, but also by the financial institutions, state-owned and public funds. But if we're talking about Ukraine, we will need the similar magnitude of investments to turn around the Ukrainian steel industry. And that's why I'm saying that without the definitive end of the war, without the security guarantees, I don't see how this is feasible in the near future. I just don't see how investors would be able to commit those finances to modernizing Ukrainian steel industry.
So it would have to be some kind of peace agreement with security guarantees, I guess, from the U.S.?
Well, at least security guarantees. I'm not sure what sort of peace agreement have to be in place, but the security guarantees will have to come from our allies, from our partners, from the U.S., from Europe. And they have to be serious enough to convince the investors that this is the end of the war and Russia will not re-attack a few months or few years later.
Yeah, how nervous overall are investors at the moment at this juncture in time?
The way I see it at the moment, the investors are just not investing. That's as simple as that. There are some investments that are being backed up by the governments of European countries, or indeed some other countries around the globe, and those that are backed up by the state funds, they are going through. But the private investments, the just normal financial investments, they are on hold. They're waiting for the situation to clear.
Mr. Ryzhenkov, I think last time you spoke on Bloomberg, you also said that you were looking at possible M&A opportunities in neighboring countries. Can you elaborate on that and what kind of projects you're looking for?
Well, we're still open. We're open to all sorts of projects that we can see the synergy with our resource base that we have in Ukraine. So we're looking at the possibilities to acquire and modernize the facilities that are not decarbonized green steel at the moment, but can be. And there are some facilities in the neighboring countries that qualify for that. I'm not going to tell you the names because that may damage the negotiations. But also we're looking at the distressed facilities that already kind of decarbonized steel assets and that we think we can turn around and bring back to life. So all of those assets are mainly located in the South and Eastern Europe, and that's our region of activities, and that's where we're looking for them.
And are you confident enough that there's sufficient demand, given concerns about the world economy, but also that you find the sufficient projects that make sense for you to invest in?
Well, the demand is quite weak at the moment for the steel products, especially in Europe. In Europe, we are seeing struggling steel companies throughout, but steel is the most universal material in the world, and it's a very cyclical business. So yes, now we're in the down cycle, but we know that there's going to be an upside later on. So we're ready to invest now to see that upside.
Okay, thank you so much for joining us. Yuriy Ryzhenkov there, the chief executive of Metinvest, with, of course, a very important conversation. Coming up, President Biden heads to Angola, the first U.S. president to set foot on the continent since 2015. We head to Luanda to bring you all of the details. That's next, and this is Bloomberg. U.S. President Joe Biden is heading to Angola, honoring his pledge to visit the continent of Africa just weeks before leaving office. Now, the trip will be Biden's only visit to Africa during his time as president, as he seeks to deepen the U.S. commitment to the continent. Well, Bloomberg's Africa correspondent Jennifer Zabazaja is in Luanda for us. Jen, good morning. So what can we expect from the visit? And honestly, why now?
Yeah, Fran, good morning to you. Listen, this was a promise that Biden made very early on in his presidency. As you mentioned, we have not seen a sitting U.S. president visit sub-Saharan Africa since 2015. We haven't seen a sitting U.S. president actually visit Angola. So for the Angolan people and the Angolan president, this is a significant trip, whether or not Biden has a few weeks left or not. But from the U.S. perspective, this is important because they say that they want to strengthen economic ties, but then also showcase what they say as opportunities for the future. So part of the trip is going to be focused on the past. Of course, the Angolan port was a major transatlantic slave port back years ago. But also for the future, it is seen as an economic hub and really a main artery for the future of mineral trade across the Lombard corridor. And so really, when we think about sort of the main focus of this trip, it really is this Lombard corridor. It's a multi-billion-dollar investment play by the U.S. to revive this railway, critical to copper and cobalt transportation. And of course, when you think about over the past few years, Angola in particular has relied on other countries for investment, hoping, though, that this is an opportunity for the U.S. to come in. And also, it's important to think about the position for Angola. For a number of years, they relied on exports of oil for their revenue, and they really have been told, especially by the IMF and others, that they need to diversify their economy. So what we have heard from President Lorenzo is that potentially doesn't matter what U.S. president is coming, but the fact that a sitting president is coming gives a stamp of approval and a sign to investors that Angola is open for business and potentially the opportunity then to invest in other parts of the economy and hopefully see it grow. So we'll wait to see both presidents meeting for a bilateral meeting. They'll also visit the Lombard corridor, and we're anticipating some announcements coming throughout the next few days.
So Angola has key ties with China, Jen. How does the U.S. wish to reshape this, if at all?
Right. Fran, some reporters were actually asking about this the other day, and were saying the U.S. responded saying that it's not necessarily about making any countries choose. It's about countries having choices. And potentially then, if they do have choices between different partners, they're able to demand more. Angola, for a number of years, has, as you mentioned, had ties, very close ties with China, with Russia. China, in particular, has been investing billions of dollars into this country, into infrastructure, but has been criticized by many officials, nonetheless President Joe Biden, for their lending practices in the past. And so the U.S. says this is an opportunity then to potentially reshape the relationship, but then also attract different kinds of investment and different kinds of partnerships. So that is their hope. But from the Angolan perspective, the president of Angola, again, has said it doesn't matter which president is in office. They are looking for any and all partners. And so, again, we will see the U.S. potentially then looking to use what will be very critical for the EV transition, this Lombard corridor, as really an anchor to the broader strategy that they see as future investment into this part of the world.
Jen, thank you so much. Bloomberg's Jennifer Zabazaja there in Angola. Now let's bring you some of the others' top stories today. And Georgia's president is defying the ruling party's plan to replace her as protesters rallied outside parliament in the capital, Tbilisi. Now riot police fired tear gas and water cannons to disperse the demonstrators. The protests were sparked by the government's decision to delay talks on joining the European Union until 2028. In Romania, the ruling Social Democrats are on course to win parliamentary elections. According to preliminary results, the incumbents have about 24% of the vote, against about 18% for the far-right alliance for the unity of Romanians. Well, NATO member state was on edge a week after a fringe independent candidate secured a shock victory in the first round of the ballot. Ireland is heading for a return to the coalition government led by the Prime Minister Simon Harris. Now, with two-thirds of results count announced, the main two parties are on track to get more than 80 seats, meaning they will need the support of a smaller party to get to the 88 needed for a majority. And the far-right National Rally has indicated in the strongest language yet that it could topple the French government as soon as this week. Now, party President Jordan Bardella has vowed to sink the French government unless there is a miracle. His comments come hours after the Finance Minister Antoine Armand told Bloomberg exclusively that his administration would not be blackmailed.
This government, in the last week, has clearly demonstrated its willingness to ensure that France could have a budget through evolution in the budget. And let me remind also that the parliamentary debate is still ongoing, and we have to wait until the end of this debate. But as you said, France is at a critical time. We have the arguments, we have the fundamentals. We have a perspective to reduce public spending and to cut borrowing, which is very important for France, but for Europe as well. So let's remind the political leaders in France that we have a common responsibility, and that this common responsibility includes voting, adopting, passing a budget.
Does that mean there's going to be more compromise, more concessions before Monday night, which is the deadline that Marine Le Pen has given you?
As I said, the French government doesn't take ultimatums. It's looking at the French parliamentary debate. It's respecting each and every parliamentary debate that leads to an evolution. We will take into account what is changing, but we won't be blackmailed. We are committed to reduce the deficit.
I understand you're willing to perhaps compromise, but Marine Le Pen has some specific concessions she wants from the government, including that all pensions be indexed on inflation as soon as January. And she also wants the government to give up this plan to abandon some drug reimbursement. On these two specific topics, is there any way to have more concessions from the government?
Let us not just focus on the Rassemblement National, because, as you know...
but it's key.
It's key, but it's not enough. And as you say, for a vote of confidence to be adopted at the French Parliament, you would need to have the Socialist Party, the left parties, to vote with the far-right parties. So it would not only be the responsibility of Marine Le Pen's party, it would also be the responsibility of French socialists, French ecologists, people who are willing to oppose to Marine Le Pen, to vote together. It would be a very bad signal politically and economically for these countries, for our country, and for these parties who are saying and claiming that they could stay government parties.
Does that mean you're trying to negotiate with the Socialist Party, not the National Rally?
No, we are not focused on with whom we negotiate or not. As I said, the government is a government of dialogue, of respect, of co-construction. This budget has been co-constructed. It's not the result of just a government project. It's evolving within the days and the weeks of the parliamentary debate. Will still be open, but not to blackmail.
Well, that was more from our exclusive interview with the French Finance Minister Antoine Armand, made by Caroline Conan. Coming up, a bumper Black Friday in the US with a jump in online sales compared to last year. We'll have more on how consumers have been spending their money. That's next, and this is Bloomberg. Well, retailers are continuing their Christmas sales push this Cyber Monday. Now, a first estimate from Black Friday suggests that U.S. sales grew compared to last year. Bloomberg opinion columnist Andrea Felsted joins us. Andrea, always good to speak to you. I mean, so there's Black Friday, and then there's Cyber Monday. I mean, when do we know how well they did?
I think we'll get a feel after today, really. I mean, Cyber Monday is not as important as it used to be. Cyber Monday was always the day you had to order for delivery for Christmas. Well, now you can get delivery right up until Christmas. So it's slightly pointless, but it's still another excuse for deals.
I mean, I kind of feel like they're often on sale. There's a lot of deals. I know this is the biggest, but does it somehow get lost because there was a deal in June or July, or is it still the big one?
This is still the big one. The deals have got earlier. They really start in October with that second Prime Day of the year, and then they really kick off in November. It has been interesting to see the deals progress. There have been bigger deals for this weekend. Beauty, lots of beauty deals about. Clothing as well. The US was very warm October, early November, so there were lots of cold weather items. They will likely find their way into the sales. Same here. We had a great September. It was cold, but October was quite warm. So, you know, you were seeing, I was in the West End Saturday, you were seeing lots of up to 40% off, up to 50% off. It's likely to have been those cold weather items that they haven't sold that are going into the sales.
And this, I mean, it's also coming to the UK and other parts of the world, right? Is this going to be like a make or break moment for retailers the world over?
Oh, yes. I mean, Black Friday's been exported around the world. It should never have been. There is no reason to have Black Friday here. It's the biggest, act of self-sabotage retailers have ever done, because you want to sell at full price going into Christmas. Now, everyone waits for those deals. This year in the UK, it coincided with payday. So it looks like the footfall was up, quite a big weekend. People will get paid. They will be looking for the deals to mainly get presents, but also to treat themselves.
Andrea, thanks so much. As always, Bloomberg opinion columnist Andrea Felsted. Coming up, Bloomberg Brief with Danny Berger and Manus Cranny in New York, and this is Bloomberg.